Hey folks, it's Aidan CryptoBirb speaking. Welcome to today's Friday webinar. The big bull seems to be here. The big bull seems to have landed for what we know to be a pre-election year, and over 84 years of data. The pre-election years have always been the strongest ones and tended to perform the best to the upside in terms of the performance returns and generating opportunities. This all together combined with almost the craziest accuracy that you can get, 83.3% for something that we know as January barometer. Well, confirmed that whenever January closes positive, the following rest of the entire year becomes and follows what January gives. January closed super bullish. This seems to be a bullish year. Let's dig into the charts right in a second. Welcome, everybody. This is again CryptoBirb talking to you straight from the office. And well, the big bull is here, like I said, and it's so apparent, it's so seen. And there's like this immediate shift, immediate change from the market technicals that you can see inside of the market, right? For my job as CMT, as chart and market technician, it is to tell you and give you a little bit of a deeper insight into what we know about technical analysis outlook and the chart reviews, right? Because we as the technicians, we as the technical analysts, technical traders, tend to rely on what's happening inside of the market, right? We don't try to kind of like, we disregard what's happening outside of it, right? We disregard what's happening too much with the monetary policies. Our job is to focus on the chart because we believe that whatever happens outside of the market, it is reflected by the price and the behavior of the investors, right? So the price movements reflect or discount, well, if not all of the information, then most of the information that you can read and trade with. And that's what we do as technical analysts. And the question is, well, if 2023 is supposed to be this bullish, if all these stars align for the bullish year this year on a complete 180-degree different shift on what we saw in the bearish market of 2022, well, the question is that we're going to try to tackle and answer if Bitcoin can really go down below 20K, well, ever again this cycle. And because it's not trading in vacuum, you do have to consult other markets, right? So we don't want to perhaps step outside and decide, okay, here's an asteroid, crash it into Earth. And despite we don't know, we're going to have a look and we're going to predict where the next COVID crash happens or when the dinosaurs, just are brought back to life. Of course, none of that makes sense, right? That's not what the technical analysis does. What it does, it helps you observe certain patterns as the ones that are consistent, the ones that are robust. And when you see for 72 years, ever since 1950, 83.3% accuracy ratio for something that we know a January barometer, right? So that 83% of the times, only 12 years out of the, 72 of the sample were kind of like, just proven wrong, if you will. But if there is so overwhelming proof speaking in favor of it, 60 out of 72 cases for January barometer to be followed by whatever January sets up, right? It kind of like speaks in the name of, well, as January goes, so goes the year. January closed bullish. Let's have a look at the deeper market insights to it. First of all, we are seeing plenty of confirmation signals, right? Plenty of confirmation signals. Some time ago, I made a tweet. Actually, some time ago, I said it was yesterday. I made this tweet that, well, this breakout can pave the path for the big 2023 bull. And that was a breakout of something that we know of as a relative strength ratio of consumer discretionary stocks of the S&P 500 sector, as well as the XLP, which stands for defensive sector, consumer staples, the basic goods, basic needs. And we were looking at this mere attempt of a breakout above the 200-day trend, which tells you that consumer discretionary leads the consumer, paves the path and leads versus the defensive stock. So it is a little bit of a comparison for the market appetite in terms of the risk on versus risk off. When XLY and this chart kind of like climbs up relatively, it tells you that not only XLY outperforms the XLP, but at the same time, it means that its inclining trend tells you about this rising appetite from the risk assets, right? So the risk appetite is increasing. This speaks well in terms of the growth. This speaks well in terms of, well, the overall improving economy in the end, as well as cryptocurrencies, right? So this is a very, very promising chart because we got to see a follow through. We got to see not only the breakout, but we actually saw something that stepped outside and even better, right, to confirm and validate that this breakout was confirmed, and even came up with this actual gap right here, right? So there was a breakaway gap also, which whenever there is a breakaway gap, it kind of like adds a lot of momentum, it adds a lot of pressure in the direction of the breakout. So this is a very, very very good performing signal, very good looking chart, and promising setup for the confirmation behind the big bull of 2023. It's still in the early stages, however, it's here. So let's have a look at the Dow Jones Industrials, right? Dow Jones Industrials versus Dow Jones Transportation average on the bottom. And what we can tell is, first of all, that we are still hovering and trading above the 200-day trend, which you can tell that for the entirety of 2022, continue to climb or continue to pull back, right? Continue to pull lower. Instead, ever since 2023 started, we not only kind of like had been already in the breakout phase above this 200-day trend, which tells you that if there is this primary long-term trend that gets broken to the upside, well, this tells you about the technical shift inside of the market, that there is this market rotation, that there is this force shift, that there is traders kind of like, exchange the hands, that one side of the market, the buyers or the sellers, in this case, the buyers win, right? That's a technical signal. And ever since the breakout, we've been kind of like moving in this contracting consolidation pattern that I would dare call a symmetrical triangle, symmetric triangle, whatever the name for it is. You can tell that, well, the Dow Jones Transportation, in fact, improves as the consumer discretionary, which corresponds with this chart that I dropped in here. It breaks away. It continues to show a lot of technical strength based on momentum, because rarely ever trends actually move and happen, right? So we can tell that market actually just tends to move with a lot of noise, right? It chops around, forms at times certain patterns, certain triangles, rectangles, whatever you name that, but it does it for 70-80% of the time. However, if it finally breaks away to the downside or to the upside, then it tends to remain in the strong, persistent movements that continue to climb up, empowered by behavioral biases of many traders, right? And these kind of like saliency effects, or the effect of fear of missing out, loss aversion, right? So a lot of irrational factors that tend to accelerate and contribute to this rising trend. So that is why I would say that looking at this symmetrical triangle after such a powerful bottom in October last year and hovering above the 200-day trend, this not only shows you a very strong and sharp shift and a very nurturing kind of like a path for something that we know of an upside trend, right? But it also is additionally confirmed, and this is what the Dow theory of technical analysis kind of like principles say, that the averages need to confirm each other, right? So the fact that you can tell that the transportation is showing a lot of strength and the Dow Jones Industrials is still kind of like moving sideways, it tells me that one may be leading ahead of the other. The transportation is strongly connected with the XLY, which is consumer discretionary, and the type of cyclical goods, durable goods, like cars, that people tend to decide and buy into whenever their discretion above their opinion is kind of like in favor of it, right? So this is a cyclical kind of like a movement. So the fact that it already break away significantly tells you just maybe a little bit of a story for what is going to happen to the industry, right? As one pulls another. The good point is that we are moving in a little bit of a harmony, right? So there's a little bit of detachment, change disparity in terms of the direction. You can tell the transportation is moving and leading upwards. This one is leading upwards, right? I would argue that this just maybe may additionally empower the overall industry to follow, as we know, also for the recent 25 basis point rate hike from the FOMC. Does that make sense, ladies and gentlemen? Let me know, everybody, how you are viewing this, and if it makes sense. If you have any questions, and if you're watching that on YouTube, make sure you hit the subscribe button, smash the likes, hit the notification bells, also that you stay notified every time we put out the new content release. And there's plenty of knowledge for you to get ready for the big bull in 2023. So if you have any questions, make sure to drop them in the chat as well. I'll do my best to answer them in the show or off the show. So let's have a look what is going to happen for the S&P 500 chart, right? So the January barometer, like I said, 83.3% of accuracy over 72 years. 72 years, that's not some sort of like a one-trick pony. This is not like a gimmick, like a trick, like something you can fool. You cannot fool somebody for 72 years straight, right? This is a very consistent pattern and a very one that is emergent. It's not a 50-50 kind of like a, um, roll, dice roll or something like a, roulette bet. In fact, 83.3%, those are very, very strong odds that you should ask yourself if you really want to counter trade a pattern that appears and confirms 83% of the chances, more than 83% of the chances over 72 years, right? That's not something, well, hint is that you probably don't wish to kind of like trade against that. So one way or another, we closed January bullish, right? That ever since 2023 started, we were looking at declining S&P 500 SPX index of the large cap stocks, right? And it not only kind of like recently broke above the December highs of 4,100, it also followed through higher. So the fact that it's not only breaking to the upside above the 200-day trend, which is a positive sign, a bullish breakout over long-term trend. Like I said, it tells you about this inside of the market, shifting the forces within it, right? And now it's breaking above the resistance that it had rejected, before. This shows you strength. It shows strength when it showed weakness before. I would arguably, with a follow through, it tells you that it's heading into a potentially bullish February, especially that is led by extremely strong communication services. 23% recovery for the sector ever since the year started. 23% in a month. How crazy is that for such a large sector, right? So then it's the follow-up leader is an actual is a consumer discretionary, right? So this is a cyclical stock, something that moves along with the market cycles. So when the market cycle kind of like just performs the bullish thesis, it's going to go up. When it kind of like performs the bearish thesis, it's going to go down, right? It aligns with the cycles. However, or on the contrary to consumer staples or healthcare or utilities, which are kind of like those basic stuff, health related, stocks that tend to be well established and much more about value, kind of like providing stability and steady income with the dividends, so that's not something that is seasonal, right? Because you don't need food just during summer or winter. You need food all year long, right? You need clothes all year long. So that's not something you can kind of like follow in the cycles or in the seasons, right? So upon the discretion, the consumer discretionary, as well as other risk assets, representatives like consumer communication services, then followed by technology, which is another emergent trend. Beautiful real estate, interest rate sensitive, REITs are actually pulling higher, which is pretty amazing. Materials are kind of like stagnant right now, a little bit sideways. Financials also, right? So for the financial services, industrials 5% year to date to the upside, and this is the bullish kind of like territory. Anything above the break-even level in this year is basically a bullish, right? And we're looking at there ever since the year started in January. We have been looking at a consistent, steady climb up for something that had been underperforming before for the entire of 2022, along with the bearish market cycle, right? So this tells you that there has been consistent shift. There's complete consistent shift, like a reshuffle, right? The market has been reshuffled, and the bulls are winning. That's what you can tell, right? On the contrary to everything like consumer staples, like I said, like healthcare, right? So everything that you want to see declining in the bull market is declining. Everything you want to see inclining and rising in the bull market is rising. This looks like a bull market so far. When you go and take it further to the energy sector, that I've been very transparent about kind of like putting big warning in terms of the energy potentially heading towards its top formation, right? Like a double top pattern. You can tell that the relative strength kind of like is right there hanging off the cliff, if it follows through lower on the relative strength side, which kind of like tends to precede and forecast that the future, show you the reflect the future in the mirror. If it breaks down the relative strength ratio, if it breaks down against the S&P 500, I would argue that this is an early confirmation of a breakdown, right? Of a breakdown below 80. And if it breaks down below 80 for the XLE, for the energy sector stocks, then this tells you that the energy trend has cooled off, has cooled down, and just maybe it's heading for a full major distribution process and a major reversal that is going to flip the bull market that had lasted from the early late 2020 and early 2021 in well up until now, right? So to me, the trend has not only flattened, the 200-day trend kind of like it's still inclining. However, the slowdown is very apparent. So I would be very cautious about calling this a confirmed bear market anywhere near, right? Still in the bull market, but this bull market seems to be more and more probable to reverse in the upcoming incoming months. So this is something that I want to see a signal for, right? And the technical signal would be, first of all, the fake out on the top, which we've already seen, this local distribution, which kind of like, followed through lower and then moved to this inclining, rising, not a wedge, but rising channel, ascending channel, which is a bearish formation, right? So we not only kind of like didn't manage to pump above the tops and reclaim the resistance, but it also kind of like reinforced the resistance area, and it's close to mean reverting towards the 200-day trend, which is a primary bull market trend. And if it breaks below, like I said, this is a critical level, not only because 80 is a psychological kind of like level, like a strong, simple answer, an anchor to many traders to hang their eyes at, to place their bets at. And also, right, if it breaks down, well, then I would argue that this may put this whole bull market in danger, right? This whole bull market in danger, mainly because it's going to be much more willing to complete this double top formation, right? It's not double top yet. However, if it pulls back lower, right, towards like 65, 64, the lows of the quarter three 2022, right, then just maybe we may be looking at this major double top formation. And if it forms this double top formation, this is a bearish pattern, right? So it may well see and happen that, well, along with the overall improving economy after potentially a soft recession, this may be very promising, because if you think about the energy sector and energy stocks, any energy costs are like the hidden tax, right? So they suck money out of your pocket into its own vacuum, right? Not letting you spend your disposable income. It's taking away your disposable income, something that otherwise you could invest in the financial markets, into buying assets like, other risk securities like, Tesla stocks, or the technology stocks, right? Or like Google, Apple, or Netflix, which are doing so much better, except for Apple's earnings last day. And it would, declining energy would bring a trend of you getting more and more money left in your pocket, which you can spend in the financial market. So that is what typically boosts a little bit of demand and boosts the prices. And self-fulfilling or not, it may well turn to confirm the big bullish thesis for 2023. So that's the ratio I was talking about, XLY versus XLP. Strong leadership from the XLY after completing the bottom breakout, false bottom breakout, and over 200-day trend. So this breakout, something that otherwise had been rejected many, many times, for the entirety of the bearish side of the cycle last year. This tells me that the market has shifted to the upside. The bond prices are also have also reverted to the mean, right? 30-year bond prices, USB, is actually right now right at the 200-day trend, and is providing yet another attempt to break above the 200-day trend, which is something that we had not seen for a long while. The last time we saw that, well, the USB kind of like 30-year bond prices above the 200-day trend, above the bull market trend or the primary trend, was in last quarter of 2020. So ever since, we've remained in the bear market, right? Which is not encouraging for stocks either. So I would argue that breaking above, right? That the investors are buying back the bonds, the long year maturities. This tells you about more promising inclining tendency and expectations, because you might want to be aware and remember that the stock market is a vehicle of the future in a little bit, right? It reflects not the actual current status of the things, but more so of what traders imagine the future to be, right? So the price trends are moved and driven by the desire and the imagination of the future prices, of the future income, right? So traders don't buy just because a stock looks good right now. They buy because they hope to make money with it, right? So they imagine that if they buy, well, they have an inclination, they have a reason to believe that it's going to go up in the future. So that's this kind of like entire mechanism. So it's a forecasting tool. And how does it all connect with Bitcoin, right? Because like I said, we don't trade in vacuum anymore. We are in the free market here and there, and ever since freeing up kind of like the market on the public float, on the free float, you know, this has caused many markets to connect and interrelate with one another and bring the relationships which had otherwise never been seen before, right? So that's also when the full emergency of technical analysis, this emergent trend of technical analysis popularity has become to go more and more apparent. And because lots of traders are in the markets are overall, heavily inflated, and we're of course still at heavy inflation. So there's not much to be discussed about the market. It's that the economy is as inflated as it has ever been, with so much money still in the circulation, right? So the bigger the bubble grows, the bigger the balloon inflates, the bigger the hook or the boom is going to be when it finally bursts, right? So each and every next cycle may be a little bit more dramatic with the bearish consequences, right? So we'll see about that. Or at least in terms of the stability of the financial system, right? Speaking in what we know about the CBDCs, just maybe as well. Hope it makes sense, right? So the question is how it all connects. For Bitcoin, and can Bitcoin really drop below $20,000, right? Like I said, Bitcoin is not trading in vacuum, which is exactly why we have just performed and reviewed the charts, to have this compelling intermarket technical analysis outlook to help understand, okay, what is Bitcoin doing in relation to the other stocks, to the other assets. And the reason for that is that Bitcoin is a risk appetite measure, right? So just like cyclical stocks, just like this XLY or this consumer discretionary or like, the communication services or technology stocks, if they move up, Bitcoin is likely to follow them in the move up as well, right? And this has been no different, because ever since bottoming out, last year, we have been looking at this. Well, first of all, this, fake breakout on the bottom, right? We were looking at this 2021 kind of like a massive fake breakout on top. At first, right, over $65,000. Then we were looking at a little bit of an invert situation where we were moving between 17,500 and 25K, right? The June floor of last year. And we broke below for a moment, traded there, and pushed back higher, right? So this confirms this typical followed, false breakout, right? When it kind of like tilts below the level, but it brings it back again soon after, right? So this is what we confirm to be a false breakout or a fake out or a fake breakout, regardless of the name. The fake breakouts tend to perform better in the opposite direction. So it means that if your follow through, if it's lacking follow through and something that would otherwise break to the upside, is looking like a potential breaking the resistance is bullish, selling, breaking the support is not bullish, is bearish. Well, in the technical analysis principle and standpoints, then technically, when you see a breakout of a resistance, it should go up, right? But if it doesn't go up, it means that there had to be a significant sell off and then bring enough selling forces that push the prices lower, that pull them lower and invalidated the breakout, right? This is what we know a fake breakout. And the fake breakout, when it happens on top, right, or on the bottom, and at times, they form certain patterns like head and shoulders or double top, double bottom. But just maybe what matters is that these fake patterns, fake breakouts, false breakouts tend to perform better in the opposite direction. So it tells me that chances are that it was going to be willing to continue to push higher eventually, regardless of local like pullbacks, local corrections, right? So you can tell that there is a strong alignment of two trends, 50-day trend, which is the blue curve, and the 200-day trend, which has stopped moving down, right? This represents the bull market or a bear market trend, a primary trend, right? The trends kind of like are classified into primary, which is the long-term distance time horizon, the medium term, and the short term. So this is a long-term trend and continue to go down for the entirety of 2022, ever until the breakout in the 7th of January. So, or soon after. So, I would argue that this breakout is bullish, right? This breaks again above the previous bearish dominant tendency. This shows shift in the market, that traders have shifted their mindset, their mental approach to the way they perceive the Bitcoin. They don't see it bearish anymore, right? It's getting close to the 25K August bear market rally, kind of like a resistance, right? So it's natural that it's going to face a little bit of price, resistance at the price barrier, right? The selling forces at first kind of like may interrupt, as people knowing that they failed before in the $25,000 region, they're going to place their bets, place their asks, and because of the loss aversion, they can even place it even lower, right? So the behavioral biases, emotional biases, just like the fear of losing this loss aversion, as we know, is going to make them irrationally lower their bets, right? So if you have a strong resistance, just like this 25K, traders are not going to place at 25K, but just because they fear of losing the profit. If they were rallying Bitcoin from the lows, they believe, okay, and this is going to be irrational, right? They're going to say, okay, this is a resistance, and even though I've made a lot of money, I don't want to lose this money, right? And this loss aversion is much stronger than the willingness to earn profits. So they're going to lower their ask orders, right, and the sells, in the name of not losing their position, rather than to letting the trend continue to grow, right? So people, in terms of in the time of uncertainty, when it's met, are going to rather than rationally decide based on emotions, right? Away from pain or towards the pleasure. And here is away from pain. The prospect of losing the profit is going to drive them into sell the bids lower, which makes those price barriers work, right? So this is a little bit self-fulfilling, but it works regardless. Otherwise, the last sell signal of 50-day curve breaking below 200-day trend is what we got in 2022, right? And otherwise, we are right now about to pull off a bullish crossover, right? A 50-day trend breaking above 200-day trend. So the medium-term basis, the medium-term trend is breaking above 200-day trend soon. And if that happens, this tells me that this change, this shift in the market is not short-term, is not short-lived, that the medium and long-term implications are to be had, which tells me that this is a confirmed bull market. So can it pull back to 20K? Well, the question is that because those averages can be used as anchors, many traders are going to look at this, and because they're going to look at this, it's going to potentially work as an anchor, right? So that's where lots of eyes are going to be there, around $20,000. And this so far seems to be like a good spot, for an eventual pullback, right? So I'm not saying it's going to, Jesus Christ, my mustache is scratching like crazy. So I'm not saying it's going to pull back immediately towards 20K. It may well just continue to grow, because like I said, when the market just chops in sideways like it did for the entirety of 2021, or it did for almost half of 2022, right? Then you have like this pattern that kind of like chops sideways, boom, breakdown, sideways, breakdown, right? And same in here, sideways, up, sideways, up. So here we go, sideways, down, sideways, up. And when it finally catches on the trend, and it catches on those short movements, movements that appear infrequently but strongly, they are persistent. Once the market catches on fire, it continues to move along with it, right? So it builds this momentum, and because of behavioral biases, traders are going to be inclined to buy and continue to buying. So this is what makes me feel that a mean reversion process, be it at $20,000 or 22 or even higher, may be due. However, betting against a trend when it's emerged, when it's broken out, when it's bullish, is rarely ever ending well, right? When it finally breaks, well, the principle of fading the trend is when there is lack of it, when the market just moves between the frames and the range lows and the range highs, if you will, a certain pattern. Well, as long as it's trading within the range, it's continued to kind of like bounce between the levels, right? So unless it breaks, and once it breaks, you don't want to assume that it's going to end. When it breaks, it's going to break 20-30% of the time, but when it breaks, god damn it, you don't want to be counter trading that, right? You have to be aware of this. So and so far it's broken, and it's broken very sharply, very nicely, and that's what I know, that's what I see, right? Counter trading powerful trends and kind of like framing your conservatism bias or this confirmation bias. We are not in the range anymore, right? In terms of anything the short-term regards, we are in the medium-term range highs area. So when it finally breaks above 25k, this is like a price action confirmation that we broke heavily, and also on this long-term basis, right? So that's on one hand, if you go ahead and knowing that we have bullish tendency in February to follow through, right? For stocks, for S&P 500, and for Bitcoin, again, bullish seasonal pattern over 12 years, over 30 years, 35 years here on S&P 500 is not something that you would perhaps necessarily want to counter trade. So we have bullish trend breakouts all across the board, technical shift of the way that the market looked in a 180-degree shift from the complete bearish polarity to the complete bullish polarity, right? And the best reason and the best example of that is just this performance chart. Anything that is risk on, anything that is cyclical and should pump in a bull market pumps. Anything that should dump in the bull market dumps. So that's not something that so far I would love to counter trade, right? Counter trading such powerful trends and into bullish historical pattern of February's, right? We're buying into February's with the return cumulative profits, basically, that are positive with 30% of annualized return and 65% of the winning trades, winning chances over 30 years, 35 years. This is not something I would again try to counter trade, right? There's a strong edge in trading from bullish January into bullish February. Stocks are strongly correlated with Bitcoin right now. S&P 500 within the 7-week correlation coefficient is here at 0.96. This is a very, very strong correlation, which means that whatever, there is a big accuracy in expecting Bitcoin to follow the moves that stocks will do, right? So if stocks go up, Bitcoin is likely to go up. If stocks move down, Bitcoin is likely to go down. And that's not always happens, right? We had the situation of inverse relationship of negative correlation between Bitcoin and stocks, and that was the market bottom, by the way, right? And it happened to be coincident with many market bottoms in the past as well. So something to note and take away, maybe. Besides, this is the 5th bull market starting, it seems, this year, and we are in the earliest stage, right? The orange circle area is what I personally imagine. This is speculation. I may be wrong, so don't take it with a grain of salt. I'm trading the trend since 16900s anyway, so I'm take it with a grain of salt. Is what I imagine that ever since Bitcoin started trading in June 2020, in June 2010, it had seen this emergent pattern that if or after a bear market, if there is this first successful break above 200-day trend, this sets and paves the way for the bull market to come. And this is exactly the same pattern we had seen in 2018, in 2015, and in 2012, right? So again, the same pattern that each and every single time was present ahead of the bull market's kickoff is present now, right? And regardless if it pulls back to 20K, which I think is possible, right? I wouldn't say that it's very likely for it to go back below 20K, like, to $10,000 or to $5,000 anymore, right? I do think that the bearish thesis is invalidated, and it was invalidated with this bearish fake out, right? So we had the fake breakout on top, we had the fake breakout on the bottom. And this not only means that trend is likely to persist in the opposite direction, then even though we have a little bit of resistance here, like I said, at the long-term resistances at 50-week trend and a 200-week trend at $25,000. This coincides well with the price action, so this is a very consistent area of resistance. And as long as it's trading below, and now it's going to face a little bit of opposing forces at first, with a chance of a pullback potentially towards 20K, or maybe even slightly below. Like if it gets 19,900 or 19,500, I would still refrain from calling this a bear market continuation. To me, all the stars align and tell you that intermarket relationships confirm this is a bull market start. It's still in its early phase. It's still in its infant phase, right? It's not full blown out situation that you're going to see, each and every single altcoin is popping up 200,000x in a matter of day. It's an early warm up. It's an early stage. However, it's on the bullish side. That's the way I look at it. So it's early stage of the bull market. And the early stage can be additionally advanced and confirmed as soon as we get a breakout above $25,000 technically. This is what would add a lot of belief and certainty to the people, to the traders, confident, that the bull market is kicking off, which may promote further trending clients. That's the way I look at it. Hope it makes sense so far, yeah? Please let me know, guys, again, because we're soon wrapping the show. So if you're watching that on YouTube, make sure you hit the notification bell so that you stay notified every time we do dispute all the new market scenarios, right? Each and every single day, we have plenty of the content coming out. So make sure you stay tuned and motivated to continue to learn, because you are experiencing an early stage of the bull market, right? So is this something you want to miss out on? Hint, I would say no. So being early pays much more than being late. So here, with Bitcoin kind of like breaking to the upside, and it's right now hovering between the resistance of $25,000, which, like I said, is a strong anchor, and 21,500. It may pull back, perhaps 25 comes first, and fakes out the breakout momentarily, just goes lower towards $20,000, right, where the main support resistance or support level is. So I would be cautious saying that it's not possible for Bitcoin to go back below $20,000 ever again. I would say it's possible due to noise. It's possible due to some unpredictable stuff like black swans, right? We had black swans before, like president assassinations, like some bombs blow up, or World Trade Center, or COVID, right? There are plenty of those. Imagine there's like some fucking alien attack in 2023, like some alien invasion, which I heard stories about to happen 2023. So if something like that happens, technical analysis or the chart of Bitcoin is not going to tell you that, right? So you have to be mindful that anything that happens outside of the chart, outside of the market, outside of Bitcoin may impact Bitcoin, and that's an exogenous factor. You cannot really predict that. However, assuming that the market does not see this alien invasion and other black swans, I would argue that we're in a good position, inclining 200-day trend, which tells you that the main narrative, the bullish tendency, is the new dominant regime, for 2023 to confirm. The pre-election years tend to be the strongest ones historically over 84 years of data. 83.3% of the accuracy ratio for the January barometer, which has been consistent in the 72 years of sample, right? Bullish January, breaking intermarket correlations, breaking with the intermarket correlations, market risk asset breaking higher with a complete shift and rotation. This is optimistic. Even though there may be pullbacks on the way, there might be a softer or hard recession, harsh recession, in the coming months. We are still looking at significant, uncertainty. We're still looking at deep yield curve inversion, which gets even deeper when the Fed fund rate is kind of like inclined, and the FOMC continues to climb the rates. And at the same time, the investors are pricing in declining rates for the 10 years and the long-term maturities. This deepens the inversion of the yield curve, and inverted yield curve has historically been an excellent indicator of recession. So that's what we are in the heaviest recessive indicator signal since the 1980s. So 40-year data is telling you, be cautious about the business, be cautious about the economy as it shrinks, as it continues to weaken, right? So that's not something, again, you want to fade. Just be mindful. However, luckily, the market cycle is different than the economic cycle. The economy cycle can be in the recession, can be contraction, within contraction, and the bull market in stocks can be present. And that seems to be the case most likely right now. So again, but be mindful of potential pullbacks, right? Even if you get a potential pullback, it's not going to invalidate or even break slightly below, right, towards like $90,000. It's not likely to pull or rotate the 200-day trend, right? This 200-day trend tells you that you have to have a 200 days of history of prices to make any change, right? 200 days, not just one day, not just 5 hours of below the average, right? 200 days needs to be consistent in a specific direction to move this curve up or down. Yeah. So this inclining trend is promising. The breakout is promising. We're staying in confirmed and validated breakout phase of this infant stage of the new bull market of 2023. Right below the critical level of the August highs of the bear market rally of 2022. If it breaks higher, which I think eventually it will, we may see a little bit of pullback and a little bit of a headwinds, on at the overhead resistance. Like I said, traders are going to place their bets in here and kind of like pressing from the upside to the downside, adding those selling positions, which may turn the markets locally, right? I'm not saying it's not possible to go back to 21,500 or even to $20,000. This seems like a sweet spot if you get the chance to re-enter, like a breakout retest over this long-term trend, right? However, that eventually is likely, right? However, I would say that trends tend to persist. Such a powerful breakout comes once in a while, only 20-30% of the times of the chances you're going to get lucky if you see this trend, and that's the trend that you are having and looking at right now. And those trends tend to persist, which means that they continue, right? They're more likely to continue down to reverse. So long story short, with my Barbicator Pro CTA or high tech from trailer, I'm still bullish ever since the bull note on 16,900s at the 7th of January, which is where I bought Bitcoin. Excuse that. We're struggling over $24,000. You can tell that there's in the line chart, it's kind of like inclining, so it's a little bit improving. However, this improvement is slow. So be mindful of local pullbacks. It may well break below $23,000 and kind of like just chop around. Likely, we have this chop candidate, right, with lots of spikes on top of this candle shadow standing out and sticking out of the box. So I would argue it's possible we spend a little bit of a choppy time here on the consolidation pattern. However, those consolidation patterns are merely and barely an interruption in the strong apparent trend and emergent trend. So I would say that this, if anything, if it continues and if it pulls back to $22,000 or so, or even lower, 21,500, like I said, it may still be a continuation pattern to this emergent trend, which is very strong and persistent. So long story short, ladies and gentlemen, this has been a nice session, 40 minutes of very intense educational content for the intermarket correlations, trying to answer the question whether or not Bitcoin can drop below 20K. The answer in simple terms is yes. It's not so much likely, but it's yes. It's maybe due to a noise. It may be some exchanges dropping below 20K and not the others. So take it again with a grain of salt. Take some black swans. Predict or expect unexpected. Hope for the best, be ready for the worst. Those are, I think, the points that you want to be implementing in order to trade safely and make the best use of this big bull infant phase of the new bull market emergence. And before I go, if you guys need help to get you ready, we have a free calls only program with Bybit. Well, technically it's not free, right? Because otherwise, if you don't really wish to, have the deal with Bybit, with us, with our partners, then you can pay still $1,428 every year. However, if you want to go and follow free Bybit deal, you can get all of our amazing, excellent, marvelous signals, premium insights of the market completely at no charge whatsoever. This is cost of $0, $0. And you can get that by going to our website, to theburbnest.com, right? theburbnest.com/COBB. theburbnest.com/COBB. Go ahead, make sure read out the instructions. Follow what the Bybit instructions are. And when verified, when validated, calls only with Bybit for entire year may be yours. And you can get ready not to lose in the early stage of the bull market. And if you don't lose now, you can make so much more money when the bull market truly kicks off. You want to get ready for this. You don't want to miss out this opportunity. It costs you round zero. Go to thebourbons.com/COBB. And guys, this has been a pleasure talking to you. God bless you all. See you around, and bye bye.